Welcome to another episode. My name's Jose Najarro, and today we're going to take a look at Electronic Arts EA Games. So let's get started. EA Games reported earnings today after hours, and it is down about 3%. It's down $3.44, sitting at about $108.20. On today's episode, we're going to do the next things. We're going to take a look at Seeking Alpha news article to take a look at how EA Games is doing. Then we're going to take a look at the information provided to us by EA Games themselves, both the slideshow and a spreadsheet they gave. And finally, I did a few episodes this week due to the earnings seasons happening. So definitely check out my other episodes and don't forget to subscribe. I just did Amazon, I did Facebook and Microsoft yesterday, and I also did AMD and Apple the day before. So hope you guys are enjoying this episode, and don't forget to subscribe. So the first thing we're going to see is earnings per share were $1.18, and it beat by 27 cents. Net bookings were $1.98 billion, and it was a 23% year-to-year growth, and it beat by $10 million. So we saw a beat in earnings per share, and we also saw a beat in net bookings, but this company is still down about 3%. So in this next article, we're going to see why this company has dropped. Even though this company beat expectations on both earnings per share and revenue for this holiday quarter, for the next quarter and for the end of the year, this company has gone a little bit light on expectations. For quarter 4, EA Games is guiding net bookings of $1.15 billion, which is light to the expected of $1.2 billion that was expected for them. And for the full year, the company is forecasting $5.15 billion compared to what was expected of $5.2 billion. So we can see, right, even though they did really good on quarter three season, they are expecting that quarter 4 will be a lot lighter than analysts expect, and that caused the shares to drop. The final thing I wanted to take a look at is see how this company's forward PE ratio is. For March 2021, this company currently has a forward PE ratio of 22. For a software company, 22 is not that bad in my opinion, but let's take a look at what this company has to say. So now we're in the slideshow provided for the company. So remember, we are looking at quarter 3 for fiscal year of 2020. We're not going to look at the whole slideshow. We're only going to take a look at some of the ones I have highlighted, and then we'll take a look at another information that they provided. So first, we're going to take a look at the EA growth trends, and this has the revenue for each year and what is expected for the end of this year. So for the end of this year, EA Games is expected to make $5.475 billion of total revenue. So this includes net bookings and deferred bookings and deferred revenue. So almost $5.5 billion. We can see that this is much higher than the fiscal year of 19. Fiscal 19 was a little short of $5 billion, so an increase of about $500 million compared to the same time last year. And for fiscal year of 18, which was the best year for this company, was 5.15. So it's even expected to do better than 2018, which was better than the company's, which was the company's best year. Next, let's take a look at net bookings. Net bookings for the company is expected to be $5.15 billion for fiscal year of 2020. And it is much higher than fiscal year 19. Fiscal 19 was 4.95, but it is still lower than fiscal year 18. So we can see, like I said, 2018 was a very strong year for EA Games. But look, 2020 is definitely catching up. Next, we're going to take a look at gross profit. Gross profit for 20 is expected to be 75.2%, and that's similar to that of 18, and it is a growth of 19. And operating cash flow for 20 is expected to be $1.7 billion compared to $1.69 billion in 18, and is better than fiscal year 19. So first you can see is like I mentioned, fiscal year 18 was a very strong year for EA Games. So it's pretty good to see that both net revenue and operating cash flow are gonna be higher than 2018. And then we see gross profit and net bookings sitting at pretty much similar levels to 2018. And we can see all of these are much better than 2019. So we see that trend going back up. So it's not looking that bad for the company. And one thing I just want to mention too is net bookings. Net bookings are sales made this quarter alone only, because you know how companies sometimes have pre-sale games, or you have to reserve the games. So sometimes that revenue, that sale is made a quarter ago, so they don't count that in net bookings. Net bookings are actual sales made this quarter, and all the other gaming companies do this, and I think it's actually a pretty smart, because I want to know how the company's doing this quarter, not how well it sold last quarter. So that's why they talk about net revenue, and then they talk about net booking. Next, we're going to take a look at net bookings for this quarter and compare it to previous quarters and the different sectors. So first, there's three platforms for that this company is in. First is PC and others, next is console, and next is mobile. So the biggest of all three is consoles. Consoles make up a huge portion of the total revenue. For revenue of $1.4 billion this quarter, this company made $1 billion just in consoles alone. So we can see that consoles are a major player, and the next is PC and other, and finally is mobile. Consoles grew 25% compared to the same time last year, which is, again, if you guys have been looking at I've seen my other videos, all these titans have seen revenue growth year to year of about double digits. And that's, to me, it's pretty impressive. And it's pretty crazy that it's becoming the norm for all these companies. Year to year growth on revenue is 20%. PC and other grew 21% in revenue. Consoles grew 25%. We are seeing a decrease in mobile by 6%. All right, so next let's take a look at net bookings in the trailing 12 months. In the trailing 12 months, year-to-year growth, this company has 15% year-to-year growth. PC and others have 35% growth. Consoles have 18% growth. And we're still seeing that mobile 17% decrease. So we're in both trailing month and quarterly data, we see mobile losing numbers. And we see both PC and others and console having double-digit growth, which I think is pretty good, especially since both of those hold a higher portion of revenue. In the next slide, we're going to take a look at net bookings by composition. So here, the three major compositions are full game downloads, live services, and mobile platform. Again, full game live services make up a huge percent out of this $1.4 billion that they made this quarter. Almost $1 billion came from live services. And live services, for those that don't know, this is pretty much your loot boxes and any other in-game charge that you have. They have the Sims, so any extra pack. If you have Madden, I'm pretty sure they have teams or players you can buy with full cash. So this is what live services is included. Full game downloads is just a full game, and then mobile or anything related to your mobile games. So here in the quarter, we see 16% growth compared to 2019 in full game downloads. We see 27% growth in live services, and we see a 6% decrease in mobile. And one thing I know, I told you guys, remember 2018 was the strong year for this company, for EA Games. But here, if we take a look at quarter 3 fiscal year of 2020 compared to quarter 3 fiscal year of 2018, you wouldn't believe that 2018 was the strongest. You look at the strength of this quarter 3 net bookings. So net bookings was $1.44 billion for quarter 3, and for quarter 3 of 2018 was $1.23 billion. Now let's just take a quick look at the trailing 12 months just to see growth rate. The overall growth grew 15%, full game downloads grew 8%, live services grew 27%, and again we see that mobile decrease of 17%. Next, we're going to take a look at any games this company has. For quarter 3, this past quarter, this company did release a nice amount of games, and my favorite one was Star Wars Jedi: The Fallen Order. Obviously, that was the only game I played, and I think it's one of the only games I played from EA Games, but the game was really good. It also released Need for Speed Heat and Plant vs. Zombies in quarter 3. For quarter 4, and this company has no games coming out, and which makes sense, right? There's not much happening during the spring. Quarter 2, we have summer. In quarter 3, we have holidays. So quarter 4 and quarter 1 are probably a little bit slower since most of the kids and most of the people are probably working and worrying outside of summer vacation. So I think it's very important that most of them come out during quarter 2 and quarter 3. In this other slideshow that I have here, this they prepare, I wanted to take a look at future games. And for 2021, this company expects to launch 4 sports titles, including new games in FIFA, Madden, and other franchises. They also have 4 other titles that are drawn from the breadth of their IP, so we might see another Sims game. And they also want to publish 4 more titles globally from smaller developers. Finally, they expect 2 mobile titles to make it to soft launch. So for 2021, they're expecting somewhere around 8 to 12 games, which I think is pretty impressive, maybe up to 14 games. So that's how many games. Unfortunately, they haven't given us those titles yet. And for 2020, they expect a new Battlefield to come out, especially with the new generation of consoles coming out this upcoming holiday season. They expect new Battlefield and obviously new launches of their FIFA, Madden, and other services. Next, I just want to show you guys some of their games, and here they have the live services and mobile. In consoles, they have Star Wars Battlefronts, they have EA Access, Apex, Star Wars The Old Republic, Madden, FIFA, UFC, Anthem, more FIFA, The Sims, Battlefield. And in mobile, they have Bejeweled, more FIFA, NBA, Madden, Need for Speed. They also have Need for Speed here in consoles. A lot of other games, Simpsons and Tetris, SimCity. So we can see this company definitely has a very good portfolio when it comes to variety of games. So that's all from their slideshow. Next, we have one more thing to take a look at, and it's the document they provided with their financial results. Here, the first thing we want to talk about is FIFA Ultimate Team matches were up nearly 40% year to year from launch through quarter 3. So that's pretty impressive. The other ones I talked about already, so that's why I'm not going to re-mention them. And during the quarter, The Sims 4 surpassed 20 million unique players worldwide live to date. That is pretty impressive that one game has about 20 million unique players. My wife is actually one of those players, and I know there's plenty of people playing The Sims. And all these expansions that come out for The Sims is ridiculous. Every 2 months, you're buying an extra $20 of expansion. I know, because of my wife. Next, let's take a look at net cash from operating activities was $1.1 billion this quarter, and a record almost $1.9 billion for the trailing 12 months. So this company is doing very healthy financially. EA repurchased 3.1 million shares for $305 million during the quarter, bringing the last 12 months of 12.8 million shares bought for $1.2 billion. So they've almost paid about $100 a share on average. The next thing we want to take a look at is the company's income statement. So here in the income statement, first we want to see net revenue, right? We see net revenue for December, for the 3 months of December for this quarter were $1.593 billion, and this is including deferred revenue and net revenue and net bookings. So this is included all types of revenue. So almost $1.6 billion compared to 1.3 same time last year. And for the 9 month is right now at 4.15 compared to 3.7 same time last year. They did increase total net revenue, right? Total net revenue grew by about $300 million. And the great thing about that $300 million growth, total cost of revenue did not grow by much. Total cost of revenue only grew by $70 million. So they kept an extra $230 million. So gross profit this quarter was 1.08, almost $1.1 billion compared to $0.9 billion last year. So we can see, right, that gross profit is increasing. Next, I want to see where this company is spending its money. For a software company, so right, so video game, even I say software company because a video game is a software in its own thing. They have software engineers working on the games, developing the games. These game developers are just another form of software engineers. So I want to make sure that this company is up to date with their research and development, right? This company needs to be able to come up with new ways to create games and continue to develop with the ever-growing market. So research and development this quarter was 389 million compared to 334 million same time last year. So I'm happy to see that research and development grow. This is one of the this and marketing and sales are two operating expenses that I don't mind growing, because if they are growing, it means this company is one, trying to get trying to stay up to date with the current trend, and two is trying to increase the amount of sales and its marketing abilities, which are both good things for the company. So research and development for the 9 months of this year, right now it spent $1.15 billion in research and development compared to $1 billion same time last year. So we can see this company is spending a little more money on research and development. But if we take a look at marketing and sales in the 9 months of 2018, this company spent 473, and the 9 months of this year of 2019 it spent 464. So marketing and sales did not increase. It actually decreased by like about $9 billion. Total operating expense obviously increased, and right, if you usually spend more revenue, you are gonna also have more operating expenses, which is not that big of a deal. Next, let's take a look at basic shares. This company right now is sitting at 292 million shares compared to 302 same time last year. So this company is buying back shares every quarter, which I think is pretty impressive. Next, we're going to take a look at my favorite statement, and that's the balance sheet. Here, I can tell, I feel like in this statement, I can see how the company is truly doing. The first thing I see is cash and cash equivalents, and it's down about $900 million compared to March 31st of 2019. So that's the beginning of quarter one for this fiscal year. So quarter one of this year had $4.7 billion in cash. Quarter three of this year has $3.6 billion in cash. But we can see a lot of that money most likely went to short-term investments, because short-term investments grew by $1.2 billion. And I think that's better, right? I would prefer this company it still has a nice amount of healthy cash. It has $3.6 billion in cash, but it sent some of that cash to work as short-term investments, which usually provide a higher rate of return than cash and cash equivalents. Total current assets grew only by 300 million this quarter compared to same time compared to quarter one of 2009 of this fiscal year. And we can see the biggest change here was definitely that increase in short-term investments. Next, for the total, this company's total assets at the moment is sitting at $11.1 billion compared to almost $9 billion last year. So that's an increase of about $2 billion. The two biggest impact to this were, one, the total current assets, which grew by about $300 million, and two, this company paid, it seems to have deferred income tax. And what that means is this company paid off some of its income tax already, about $1.8 billion compared to $35 billion at the beginning of quarter one. So that eventually helps offset the cost, so it counts as an asset. Next, we're going to take a look at liabilities. If we take a look at total current liabilities, they pretty much match identical to what they were in quarter one compared to now quarter three. So there's no real point in really looking at the rest of the current liabilities. There's no major change happening in any of them. The only other thing I like here is senior notes. Senior notes are long-term debt, and senior notes is sitting at $995 million this quarter compared to quarter one 2 quarters ago, which was 994. This is probably just an increase due to interest rates, interest due to these loans. But look, this is pretty crazy. Total liabilities this quarter is $3.9 billion compared to 3.626 in quarter one. Again, not a big increase for my mind to really worry about. It grew 300 million. But look, this company has enough cash and cash equivalents to almost pay off its full total liabilities. If you add the short-term investment, this company has a surplus of just short-term investments and cash equivalents to pay off its total liabilities, and that to me is a good thing. That tells me that this is a strong company and is ready to wither out any form of downtrend in the market. Finally, the last statement we're going to take a look at is the cash flow statement. In the cash flow statement, the only one I truly care about is cash flow from operating activities. This is the amount of money it makes from its everyday use, its cash flow from its everyday use. This quarter, it had 1.1 billion compared to the same time last year of $954 million. So a nice increase there. And if we take a look at the 9 months of 2019, it has 1.3 billion compared to the same time last year of $900 million. So we see an increase in net cash flow from operating activities. And the final thing we're going to look at is repurchase of common stock. This quarter, this company bought about $305 million of shares compared to 292 same time last year. And for the current full year right now, it has about $916 million worth of shares compared to 891. So these numbers are all pretty close. It continues to buy shares, and like we saw right now, it looks like the average price is somewhere about $100 per share where it's buying off. So that's all I have for now. Let's just do a quick recap of what I think about the company. First thing, since we just talked about the balance sheet, like I said, is one of my favorite things, and if the balance sheet is bad, no matter how good the company is, it's not something I would invest in, because even though the company could be good, if a downturn happens, which can happen at any moment, it can destroy the whole company. So for first, I like a company to have a strong balance sheet, and we saw that. This company also has a great income statement sheet. We saw an increase in revenue in all sectors. This company is buying back shares at a healthy pace. So that's looking good. This company has a great portfolio of games. The only thing is the guidance for quarter four, and for the year are a little light compared to what analysts expect, and that's the main reason we see this price go down. But at the end of the game, also we don't know many games coming out in 2020 from EA Games themselves, and that's sometimes a little disheartening. I would rather want to see what games are coming out, because one can probably tell what games are going to flop and what games are going to do okay just by the strength of the company. We can see live service, which are the loot boxes and the online items are increasing, and we can see year-to-year growth, and we can also see growth compared to 2018, which was a strong year for them. The only thing is this company has a very healthy forward PE ratio of 22. It's not the cheapest. Obviously, you can pick it up cheaper, but a 22 forward PE ratio for 2021 is definitely not bad in my books. So yeah, I hope you guys enjoyed the episode. Let me know what you guys thought. Take care, have a good night, and see you next time.